Okay, so I wanted to go through a really interesting trade that I just took a couple hours ago and kind of analyze this unexpected situation that chopped me out. I think it's a good little exercise in level two and insight into some level two analysis. I know there isn't too much of that on YouTube. So hopefully this will be useful. Yesterday, following the BOBA airdrop on OMG that we've been monitoring and trading, FTX listed BOBA perps and initiated trading. That's right here on this far left candle. In the past, I've had some success trading the 1 minute chart on day one, listing day tickers, but yesterday I didn't take any trades on BOBA. I thought I'd take a look at the chart today and see if it looked tradable so that I could get in on the fun potentially. So I started with the 15-minute chart, and we saw at this point where I started looking at the chart, which is right here, just after this candle, or just on this candle, I believe. No, sorry, on this candle right here. So we have 15 consecutive something like 12, 10, 15, whatever consecutive bull trend bars. And we look to be knocking on the door of what was kind of the highest major resistance on the chart. Not a really major resistance because, of course, it's such a new nascent chart, but that was kind of, where we were at right here. We had just put in this $7 high, and we're currently, I think, right after we put in this close is where I'm looking at it. Because my first buy is at 239. So during this candle, so right after we put in this close, sorry, is what I meant to say. Anyway, so this is looking like, possible opportunity to maybe like make 1% or something like that. And on lower time frames, we appeared to be putting in this little pullback reversal right here from this high, $7 high, 2 bars, and then we closed this one nicely. And so this is where I start thinking about maybe taking a trade. And I go down to even the 1 minute chart just to get a look at it, just because technically the signal for the trade is above this bar on the 15-minute, right? That we had, this was the bar that touched $7 and it closed red. So theoretical bear signal, not really a bear signal given the strength that we've been having here, but it's the first bearish candle. So anybody who has shorts will presumably have their stop above this candle. So technically the buy should be above the $7 level, but I didn't really want to risk too much. And following this candle right here, I thought we can get an entry around 697 and put the stop right here underneath this double bottom, micro double bottom, around 693. So that way I could risk a little bit less, only about a 0.5% instead of having to risk a full percent. And so, you know, like I said, I'm not really familiar with this instrument. I never really looked at the chart, so I just decided to enter on this low time frame just so that I can get a little entry and have a much safer stop in the event that things run against me. So that's kind of in this region here, and I'll just put a marker on 239. This is when we buy. This is when we actually start initiating trades, and our first buy is here, and then maybe here a little bit kind of thing after. So we get a decent follow through on this, and we get our entry at 697, stop below 693, the low of the pullback, and this is where I start to watch the level two. I wish I could have had a live recording so you could get a visual of the analysis, but I'll try and do my best to recreate it in a way that makes it easy to understand. So as we push towards $7 right here on this candle, I notice we have a large wall, a huge sell wall right at $7 of 100,000 BOBA. And one of the easiest trades that I like to take on newly listed illiquid tokens is to slam walls and then just take profit on the other side of the wall, because it will often get hit as soon as the wall breaks. Stops will liquidate right into our orders, and we already know that there should be a few stops above the $7 level. So theoretically, we should get a nice slam on the $7, and then we can fill our orders above. But when you see these walls, like, it's not always clear whether it's a wall that you should be slamming or if it's a wall that maybe you want to take a trade in the opposite direction and use that wall as your stop. That's something that you have to determine with some more context. And since I'd never traded this instrument before, I decided to err on the side of caution. And so I decided to take profit my entire position that I'd entered at 697 at just a tick underneath 7, so that as we try and slam that $7 wall, I'll get out, and then I can wait. And then if the wall is continuing to get slammed and it looks like it's going to break, I can slam the wall and re-enter my position without having to risk anything, right? I'm just having to pay extra fees. But I don't have to risk any of my buys that I picked up earlier. And this is a much higher probability because not only are we slamming the wall, but we are knocking on the door of the liquidations above that $7 level. So it kind of makes sense. And at this point anyway, I hadn't defined a take profit level because I'd just been watching this low time frame to ensure that the market structure was good to send us higher. And my plan right before I noticed the wall at $7 is kind of just take a profit as soon as I see a break in structure that I'm not really liking, or any sort of candle that is a little bit too like egregious for my taste. And once we get to like 1 or 1.5%, I'll start shaving off my position anyway and start actively looking for reasons to close. But I don't have a defined take profit, so it just makes a lot of sense for me to take my profit right under $7 and then look for a better setup, reevaluate, and the better setup would be a slam on this wall. And if we're not going to be able to break through the $7 wall, then we're at resistance anyway, and it's not a good buy. So it just makes a lot of sense to close out at that point. So we do that, and then we're eagerly watching the wall. We're out now. And I noticed around this time that on the other side of the order book, there's a 200,000 BOBA order to buy at $6.969 right here at this level, just underneath our entry. We entered right a little bit above 697, like 697.05 average or something like that. And we have this huge order right here. Seeing this bigger wall on the support side is going to give a trader more confidence that we might be able to break through the large sell order at $7. And we see buyers start to slam the wall, and the tape is entirely buy orders. So the wall gets to about 84K from 100, and we see a couple big orders of like 5,000, 3,000 kind of thing. And so I execute a small buy, and the plan is to get a couple orders filled and then take profit almost immediately on the other side. Okay, again, this is a day 2 trade, right? Not day 1. And let's talk about why that's important real quick, because it is a crucial piece of information that helps us determine our take profit levels. So by day 2, there's a bit more control in the market movements. We can see yesterday, day 1, a lot more erratic movements here, a lot of volatility, whereas a little bit now once we get to this area, we start to define a range. Movements become a little bit more controlled. They're not as erratic. They're not as violent. And buyers and sellers have found some sort of balance that they are to some extent agreeable with, right? Like everybody's in agreement that somewhere within this area is a fair price for BOBA during the time from 2 a.m. to 11 a.m. That was an agreement that the buyers and sellers found, whereas earlier it wasn't really happening that way. We had large, swingy, and violent candles. And so as time goes on, the candles get a little bit more controlled, and the price action becomes a little bit cleaner. So this is a pure momentum play trade. Excuse me. Let's go over to, now we're on the 1-minute chart. So this is a pure momentum trade. We want to be in and out within literally seconds. We are relying on a cascade of short liquidations above that $7 level to fill our take profit orders that will be looming overhead. And we'll get into that. In the past, I day 1 traded Radium when it got listed on FTX, and I slammed a wall right at $7, and I got to close immediately after at 720. And I think the nostalgia of this trade, getting the exact same price, kind of clouded my decision making. I felt a little greedy to juice as much as I could out of this instrument, but this is a market that I'm totally unfamiliar with. I've never traded it before. I've never even really looked at its chart, just a little bit yesterday. And I've never been in the trenches on the 1-minute chart and the order book level 2, so I'm really unfamiliar with the personality of this market and the market participants. And when you have these sorts of handicaps, you really should err on the side of caution and capital protection. Shouldn't be getting greedy. But nevertheless, we get greedy. we enter our take profit levels really high up here, 728. And when I slam a second batch, we see another 10K buy that brings the wall to something like 58, 60,000 left. And so I slam a second batch, and I put in a take profit up here at like 747. So the wall is slowly and steadily breaking. And meanwhile, the huge wall that's underneath us at 696.90 gets moved up to 699. And interestingly enough, it gets split into two orders. So they have a 100K order at 699, and then they have a 100K order just below it at 698, 6.984. This development empowers me to slam more on the wall because I now have a pretty safe stop, right? I can put my stop at one tick below 699. Let's say this is the wall at 699, and this is the wall at 698.4, and then this is our overhead wall at $7. So price is actively trading between these levels until one of these walls gets broken. Well, if this wall gets broken, I can put my stop right here such that when this wall gets broken and my stop gets run, it hits this wall. And we don't have to worry about getting slipped all the way down to these levels much lower, right? Whereas if it's just one wall and the trade that we're taking on the other side here is we're expecting that as soon as this wall gives in, everybody gets liquidated up. And we're trying to put our take profit orders here above here to fill. Does that make sense? So this becomes really nice having this little buffer here where we can put our stops. And now our stop is basically right next to our entry. Our entry is going to be at $7, and our stop is right under $6.99. We're literally risking a penny, and it's not. And we feel a lot better about it because it's not one of those I'm risking a penny, but it's such an illiquid market that if I get slipped, I might actually be risking 10 pennies. You're really feeling pretty confident that you're only risking a penny because it's unlikely that both walls get slammed at once and then you get slipped all the way down there. I'm not even sure how that works. But we're feeling pretty good. We're feeling pretty good with our stop here. It's a pretty safe stop. And really, really important, especially in an illiquid market like this, because slippage is a very, very real concern. Okay, so now with my stop so close to my entry and so well protected with the 100K order here and the 100K order here, we slam a third batch and place a take profit order in between my other take profits up above. So our average take profit is probably somewhere in like, I don't know, 730 kind of thing. And I wish I could like just delete all of these at once, but yeah. Now the wall is at maybe 45, 50K, something like that. And so I decided that as we're getting closer and closer to it, I'm going to slam a fourth and fifth batch if I can. And I'm going to fill a take profit on the other side, like right at $7.07, exactly 1%, maybe 1.5% kind of thing. This is just in case we don't have the strength to push all the way into the 720s, 730s on the break. And because like I said, this is purely a momentum trade. So we want to be out basically as soon as the wall breaks, if possible. Notice that as all of this is happening, this is now, we're now spending 10 minutes right up at this $7 resistance. So the slamming of this wall is very, very slow. It's not happening very quickly at all. But finally on 259, right as 259 candle opens, the tape shows a 29K slam. And I click my button that I've been, just waiting to slam. I try to slam it, but by the time the order goes through, the wall's already been broken and I don't get the fill. Because I don't get the fill, of course, I don't have any orders resting up here at 707, which gets immediately tapped all the way up to 709, I believe here. Yeah, 709.85. But we don't have any orders resting there. And the slam through the wall didn't propel us the 3% to 720 like I had hoped, but we're still in profit and we still have the confidence of having our buddy below at 699. So we feel comfortable to hold, expecting that subsequent candles should mark us into our take profits. And especially after we get this really nice follow through candle, we're feeling pretty good. But this is exactly the mistake. Trusting 699, trusting our stop at 699. 699 is not our buddy. In fact, 699 is our enemy, and especially if 699 was also the wall at 699 and the wall at $7, if they're the same person, that is especially, excuse me, that is especially important, right? The really important thing that I should have noted with how long the wall took to break, um, when the buy wall comes to 699, but it doesn't slam 7, something that's reasonable to consider is that both walls could be the same agent. Um, they could be looking to fill as much as possible below $7 and simultaneously signaling to all other traders that buys are safe because we have 200,000 in orders and only 100,000, or we have 200,000 in bids and only 100,000 orders in asks. So it gives a signal to traders that buys should be safe because we have 200,000 below, only 100,000 above. So the path of least resistance is higher. So we should slam the wall at $7. And presumably this same agent might be sitting on sells above the $7 region, 703, 704, 705, such that even if he does get fills at 699 by traders trying to slam the wall on 699 instead of trying to slam the wall at 7, this trader should still turn a profit as soon as the wall breaks, right? But they themselves are not going to break the wall because it doesn't make sense for them to do it to their own wall in such an illiquid market. Especially when there may not be that many stops even on the other side of 7. Like we said, it's not a real level necessarily. It's just a level that is being defined by effectively this order block. So this isn't something I'm paying too much attention to at the time, but it's very worthwhile to note because of what ends up happening, right? Like I said, 699 is not really our friend. And if 699 and 7 are the same person, then they're absolutely our enemy, and we need to constantly be watching the order book to ensure that our 699 wall is still there. So at 259, when we break through and we don't get the immediate fill, I check to ensure that 699 wall is still there, and it is. But I don't check at 3 o'clock when we start to see, when I'm watching this and seeing us push higher and higher and higher. The order book gets away from me. I'm on a too precise order book, so I don't see it below. And with such a strong follow through candle here, I feel a little bit good that, maybe we can keep pushing higher. But then 699 removes the walls and presumably slams this sell, probably right to that 6.984 tick where the lower wall was, and liquidates a cascade of stops, including ours, and we get liquidated at 696. We are actually the 695.70. This lowest price is us, and we got filled a little bit higher. Totally taken for a ride here, and we end up losing a little bit of money here. But yeah, really interesting. My hindsight takeaways, I guess. This grind up and through $7 took way, way, way too long. The order book on the other side of 7 was showing a lot of orders between $7 and $7.10, and so we should have expected that with how slowly we were pushing at the wall and with how low the volume was every time we did push at the wall, that maybe we don't have enough juice to jump immediately to 730. This combined with my unfamiliarity with this instrument definitely should have probably put my take profits at a much more reasonable, conservative level, like 1%, 1.5% profit, at least on a good portion of my position, so that if we do get quote unquote betrayed by 699 and chopped out like we did here, we still get some profit, or maybe break even at least. The next thing is day 2 was much slower, as we said, than day 1, because the price action has established itself a little bit more. We're not in a wild, wild west, like clear, strong trend kind of situation. And we should have seen on the higher time frame that all of these bars, right? None of them, like the strongest one was 13 cents. None of them came even close to 30 cents, and most of them are much smaller than that. So it just doesn't really make sense to target such a high level in the first place, expecting that one single candle is going to break, 5% kind of thing. Of course, it's happened before. We have broken 30, nearly 30 cents here. Oh wow, we've never actually done a full 30-cent candle. Only this one, I suppose. Yeah, this is the only candle that's ever done 30 cents. So that's another reason to really be like, this is a little bit too high. If we had put this in, down here region, much better chance of profit. Makes a lot more sense to trade. But yeah, when the average size of bars leading up to this $7 level are so much smaller than 30 cents. There's just no reason to be targeting that level. It makes sense to have a couple orders higher up, just in case the cascade is stronger than you expect, because again, this market is super illiquid. But the bulk of our position should be trying to catch profits in sensible places, like 1%, 1.5%. And, you know, like we said before, $7 isn't a high time frame level at all. This was the highest that it got, and by the time we enter the trade, we're already above this high. So if there were stops on the other side of this, they're already liquidated by the time we even look at the chart to try and start taking a thing at 7. So presumably there are not too many stops above 7, short stops above 7 that we should be able to liquidate. Not a ton of, no reason to really expect a ton of liquidity, stop liquidity above that level. So, but above all, the biggest mistake was definitely to trust that 200K BOBA support order. We're expecting to close out the exact second that the $7 level breaks, and when we don't, we really need to become aware of the other market participants and what they might be doing. 699 is trying to make money. He's not trying to help me, you know? And we should be aware of the support order, and the moment that it gets removed, we should be looking to exit. I don't even know necessarily if we would have had, like if we were watching and we were able to see when he removed it, like he might have removed it and slammed the market at the exact same moment, and there's nothing that we could do. But we need to be aware, and you know, like I said, we're trying to exit immediately. So if we don't get the immediate exit, we should probably try and exit immediately still, you know. Incidentally, if we had retained our original stop here at 693, we would never have run it, and we would have even gotten a chance to take profit here as high as 711. But two things. One, this is not the nature of the trade that we took. We're wanting to get out immediately, immediately on this spike here, and we are not looking to hold through a pullback, right? That is not the type of trade that we're taking. If we want to hold through the pullback, we don't have to. We shouldn't buy the top, and we should wait for the pullback and buy the pullback. And two, the lack of liquidity in this market could have very easily resulted in this bar taking out 693. Very possible. All the seller who initiated this strong sell has to do is sell a little bit more, and it can very easily penetrate the 693, and we would have been stopped out even down here. That's something that's out of our control. In such an illiquid market. So the best thing that you can do in these types of market conditions is to move your stop to like break even the moment that $7 breaks and we're still in the trade. That would be probably the best thing that we could do. Our stop was pretty close to break even though, and we had a really good level 2 reason to use it. But the level 2 game, it's like a game of instants, right? And it's not even seconds. So the game can change in an instant, and the instant that it does, we really have to be quick with our reaction. So that's something. I think ultimately we had a decent level for the stop and it was all good, but probably as soon as this candle happens and we don't get out, we should probably just close at whatever level it is. You can just market close, and you know, you get out for $7.02 and you make 2 cents on each thing. What the F ever, it's cool, because that's the trade that you planned. So yeah, that's the trade. I didn't lose too much, but was a little bit disappointed to not profit here. Although that was due to some pretty big mistakes in judgment, but that's okay. I'm glad we got to review this because it was a really interesting situation. This is the first time I've ever been in a trade watching level 2 and making the recognition that the two main huge orders on either side could very possibly be the same agent. And sometimes you can think that and be aware of it, but it doesn't really make sense why. And it's kind of, you know, hopefully this made it make sense to you guys. And more importantly, I think you recognize that they're the same agent, but you're like, I don't know why they would be the same agent or what blah, blah, blah could be happening. And what ends up happening is you don't have something like a move like this that chops you out and shows you what the dangers are of them potentially being the same agent are. But this is a situation where if they were the same agent, like we really got taken for a ride, you know? So yeah, hopefully that gives a little insight into some level 2 trading strategy, and hopefully it's understandable even though we don't have a order book and tape, ticker, whatever. But yeah, hopefully the explanations were a little bit understandable and you can kind of notice these situations yourself in the future. Okay, thanks for watching.